Hey everyone, Graham Stephan here, and welcome back to the channel. Today we're diving headfirst into the exciting world of cryptocurrency. Whether you're a seasoned investor or just starting it, it's impossible to ignore the buzz around crypto. From Bitcoin's meteoric rise to the explosion of DeFi, it seems like everyone's trying to get a piece of the action. But before you throw your money at the next hot token, it's crucial to understand what you're investing in. We'll be covering the top 10 coins and tokens you need to know, breaking down their technology, their potential, and of course, the risks involved. So buckle up, grab your notebooks, and let's explore the future of finance together. First up, we have Bitcoin, the cryptocurrency that started it all. Launched in 2009, Bitcoin was the first decentralized digital currency, meaning it operates without a central bank or administrator. This revolutionary technology relies on blockchain, a public ledger that records all transactions across a network of computers. This means Bitcoin transactions are transparent, secure, and resistant to censorship. Bitcoin's limited supply, capped at 21 million coins, has also contributed to its value. This scarcity, combined with growing adoption, has driven its price to astronomical levels. But Bitcoin isn't just a digital asset, it's a movement. It represents a shift away from traditional financial systems and towards a more decentralized future. Now you might be thinking, Bitcoin, isn't that old news? Well, think again. Bitcoin remains the most dominant cryptocurrency by market capitalization, and its influence is undeniable. Many investors consider Bitcoin to be a store of value, similar to gold. Just like gold, Bitcoin is scarce, durable, and divisible, making it an attractive hedge against inflation. However, Bitcoin's volatility is a double-edged sword. While its price swings can lead to massive gains, they can also result in significant losses. That's why it's crucial to do your research and understand the risks before investing. Whether you believe Bitcoin is the future of money or just a speculative bubble, there's no denying its impact on the financial world. It's paved the way for thousands of other cryptocurrencies and sparked a global conversation about the future of finance. Next up, we have Ethereum, the platform that took blockchain technology beyond just cryptocurrency. While Bitcoin focuses on being a digital currency, Ethereum enables developers to build and deploy decentralized applications, or dApps. The key to Ethereum's power lies in its smart contracts. These self-executing contracts automate agreements between parties, eliminating the need for intermediaries and reducing the risk of fraud. This innovation opened up a world of possibilities, from decentralized finance, or DeFi, to non-fungible tokens, or NFTs. Suddenly, developers could create applications that were transparent, secure, and accessible to anyone with an internet connection. Ethereum's impact on the blockchain space is undeniable. It's become the foundation for countless projects and continues to push the boundaries of what's possible with this technology. But Ethereum isn't resting on its laurels. The platform is undergoing a major upgrade known as Ethereum 2.0, aimed at addressing its scalability and sustainability issues. One of the key changes is the shift from a proof-of-work to a proof-of-stake consensus mechanism. This means instead of miners using vast amounts of energy to validate transactions, validators stake their ETH to secure the network. This upgrade is expected to make Ethereum more energy efficient, scalable, and secure, paving the way for even greater adoption. However, the transition is complex and not without its challenges. Despite these challenges, Ethereum remains a dominant force in the crypto world. Its innovative technology and thriving ecosystem make it a platform to watch closely in the years to come. All right, let's talk about Binance Coin, or BNB. This one's huge, guys. It's the native cryptocurrency of the Binance exchange, which, if you don't know, is like the New York Stock Exchange of crypto. Massive trading volume, millions of users. Now, BNB started as a utility token, meaning you could use it to pay for trading fees on Binance and get a discount. Smart move, right? It incentivizes people to hold and use the token, driving up demand. But here's where it gets interesting. Binance has been strategically expanding the use cases for BNB. We're talking about using it for travel bookings, online services, even investing in ICOs on their Launchpad platform. This constant expansion of utility is what makes BNB so powerful. It's not just a token for trading anymore, it's becoming a whole ecosystem, and that's got real value, especially in the long term. Now, you might be thinking, Graham, isn't it risky to put all your eggs in one basket, especially with all the regulations around crypto? And you know what? You're right to be cautious, but Binance is a global company. They're constantly adapting and working with regulators worldwide, plus they've been investing heavily in their own blockchain, Binance Smart Chain, which opens up even more possibilities for BNB. We're talking about decentralized applications, DeFi protocols, the whole shebang. This means BNB is no longer just tied to the success of the Binance exchange. It's building its own independent value proposition. So when you look at the big picture, BNB is more than just a cryptocurrency. It's a bet on the future of the Binance ecosystem, and that's a bet I'm willing to take. Let's shift gears now and talk about Cardano, often called the Ethereum killer. Now, I don't know about all that, but Cardano is definitely doing a lot of things right. Cardano is all about building a secure and scalable blockchain platform. They're taking a very academic and research-driven approach, which might seem slow, but it's designed to create a more robust and sustainable system in the long run. Think of it like this. Ethereum is like building a plane while you're flying it. It's working, but it's got its limitations. Cardano, on the other hand, is like meticulously designing and testing a spaceship before launch. This methodical approach might not be as flashy, but it could pay off big time in the future, especially when it comes to security and scalability, which are crucial for mass adoption. Now, the native cryptocurrency of Cardano is ADA, and it's used for a whole bunch of things within the ecosystem. You can use it for staking, governance, and of course paying transaction fees. But here's what's really cool about Cardano. It's designed to be highly energy efficient. Unlike Bitcoin, which uses a ton of electricity, Cardano uses a proof-of-stake consensus mechanism, making it much more environmentally friendly. And in a world that's increasingly focused on sustainability, that's a big deal. It makes Cardano a much more appealing option for environmentally conscious investors and developers. So, if you're looking for a project that's taking a long-term sustainable approach to blockchain technology, Cardano is definitely worth keeping an eye on. All right, guys, buckle up because we're about to talk about Solana, the blockchain that's making waves with its incredible speed and low costs. We're talking about thousands of transactions per second, folks. To put that in perspective, Bitcoin can only handle a handful, and even Ethereum struggles to keep up with demand. This speed makes Solana a game changer for decentralized applications, especially in areas like DeFi and gaming. Now, how do they do it? Solana uses a unique combination of technologies, including something called proof of history, which basically timestamps transactions, making the whole process much faster and more efficient. This speed and efficiency have attracted a ton of developers and projects to the Solana ecosystem. It's like the Wild West out there, with new and innovative projects popping up all the time. Now, the native cryptocurrency of Solana is SOL, and it plays a vital role in the ecosystem. You can use it for staking, paying transaction fees, and even participating in governance. But here's the thing about SOL. It has a limited supply. Just like with Bitcoin, there's only a certain amount of SOL that will ever exist. And as demand for Solana's technology grows, so too will the demand for SOL. And that, my friends, is where the potential for growth lies. As more developers build on Solana and more users flock to its fast and cheap transactions, the value of SOL is likely to increase. So, if you're looking for a high-speed, low-cost blockchain with a bright future, Solana is definitely one to watch. All right, let's talk Polkadot, a project I'm personally really interested in. Polkadot aims to be the internet of blockchains, connecting different blockchains seamlessly. Imagine Bitcoin talking to Ethereum and Ethereum interacting with Cardano or Solana. This is Polkadot's vision, building bridges between blockchain islands for efficient information and value sharing. Interoperability is crucial for crypto's future, fostering collaboration and innovation. Polkadot is relatively new but has shown impressive growth. Its native token, DOT, has seen significant price appreciation. The long-term potential is crucial. More projects building on Polkadot could increase DOT's demand and value. Investing in crypto is a marathon, not a sprint. Do your research and understand the risks. Polkadot has the potential to be a game changer. Let's move on to Ripple, a company that's been making waves in traditional finance. Ripple is a payment protocol designed for fast, cheap cross-border transactions. Traditional banks are slow and expensive for international transfers. Ripple uses blockchain to make this process efficient and cost-effective. XRP, Ripple's token, enables near-instantaneous currency conversions. This revolutionizes cross-border payments, making them faster and cheaper. Ripple partners with major financial institutions globally. Ripple has faced controversy, particularly regarding its centralized nature and its legal battle with the SEC. Critics argue that Ripple's ties to traditional finance and control over XRP tokens go against cryptocurrency's decentralized ethos. Supporters believe Ripple's approach is necessary for mainstream adoption and bridging the gap between traditional finance and blockchain. Ripple's technology could transform global payments. The future of Ripple remains uncertain, hinging on legal outcomes and regulatory challenges. Ripple has sparked important conversations about finance and blockchain's role in a more efficient, inclusive economy. Always do your own research and make informed investment decisions. All right, let's talk about Dogecoin, the cryptocurrency that started as a joke but quickly turned into a global phenomenon. Created in 2013 by Billy Marcus and Jackson Palmer as a light-hearted alternative to Bitcoin, inspired by the Doge meme featuring a Shiba Inu dog, it quickly gained a passionate community known as the Dogecoin Army. They use it for tipping, charity, and even sponsoring NASCAR driver Josh Wise. The community's enthusiasm has driven Dogecoin's value up. Dogecoin's rise to prominence is a testament to the power of community. It shows that even a project that starts as a joke can capture the hearts of millions worldwide. Dogecoin's impact on the crypto space is undeniable. It's brought attention to cryptocurrency and blockchain. There's room for fun and community. Maybe one day we'll all be using Dogecoin to buy our morning coffee. All right, moving on to number 9 on our list, we have Chainlink. Chainlink connects smart contracts to real-world data. Smart contracts are self-executing agreements. They work automatically when conditions are met. Chainlink bridges the blockchain and real world. It fetches data like gold prices or weather. This makes smart contracts more powerful. Now, you might be wondering, okay, that's cool and all, but what can we actually with this? Well, let me tell you, the potential here is massive. We're talking about revolutionizing industries, from supply chain management and insurance to gaming and even prediction markets. Imagine a world where insurance claims are processed automatically based on real-time data from sensors, or supply chains where every step is tracked and verified on the blockchain, thanks to Chainlink's ability to connect with IoT devices. And this is just the tip of the iceberg. As more and more industries embrace blockchain technology, the demand for reliable and secure Oracle services like Chainlink is only going to skyrocket. So, if you're looking for a cryptocurrency with real-world utility and massive growth potential, Chainlink is definitely one to keep your eye on. At number 10, we have Litecoin, often referred to as the silver to Bitcoin's gold. Created by Charlie Lee, a former Google engineer, Litecoin was one of the earliest altcoins to emerge, and it quickly gained popularity as a faster and more affordable alternative to Bitcoin. You see, Litecoin shares a lot of similarities with Bitcoin. It's also a decentralized cryptocurrency that uses a proof-of-work consensus mechanism, meaning miners compete to solve complex mathematical problems to validate transactions and secure the network. But here's the key difference. Litecoin's transaction confirmation times are significantly faster than Bitcoin's. While a Bitcoin transaction can take around 10 minutes to confirm, Litecoin transactions are typically processed in under 3 minutes. This speed advantage, combined with its lower transaction fees, makes Litecoin a popular choice for everyday transactions like buying goods and services online or sending money to friends and family. Now, Litecoin might not have the same hype as some of the newer cryptocurrencies out there, but it's important to remember that this is a project with a proven track record. It's been around for over a decade, and it's consistently ranked among the top cryptocurrencies by market cap. But Litecoin isn't just resting on its laurels. The development team continues to innovate and explore new features, like the implementation of SegWit, which further improve transaction speeds and efficiency. They've also been actively exploring privacy-enhancing features, like Mimblewimble, which could potentially make Litecoin transactions even more private and anonymous. So, while Litecoin might not be the flashiest cryptocurrency on the block, it's a solid, reliable, and constantly evolving project that definitely deserves a spot on our top 10 list. Let's dive into stablecoins with Tether. Stablecoins maintain a stable value, usually pegged to fiat currency. Tether is pegged one-to-one with the US dollar. This stability makes Tether useful for traders avoiding volatility. Tether has faced controversy over its reserves, but remains the most widely used stablecoin. It acts as a bridge between traditional finance and crypto, facilitating transactions. Many exchanges use Tether as a primary trading pair. As the market matures, demand for Tether is likely to grow. Let's talk about USD Coin or USDC. It's a stable coin pegged to the US dollar. Each USDC is backed by $1 US. It's like having digital dollars, transparent and useful for transactions. Why not just stick with regular dollars? USDC offers dollar stability with blockchain speed. It opens up DeFi possibilities. Think lending, borrowing, and earning interest, widely accepted across platforms. Add USDC to your watch list. Next up, we're diving into Binance USD or BUSD. Binance is a major player in the crypto world. Think of them as the Amazon of crypto exchanges. BUSD is pegged one-to-one to the US dollar. For every BUSD, there's a real US dollar in a bank. It's fully regulated by the New York State Department of Financial Services. This adds a level of legitimacy. It's a big deal for institutional investors. Use BUSD for trading, paying, and earning interest. It's like having a VIP pass to Binance. Why use BUSD over another stablecoin like USDC? BUSD offers fee discounts on Binance. Lower trading fees can add up. It's fully audited and transparent, gaining traction across platforms. Use it for payments and DeFi. BUSD is reliable and versatile. Let's dive into the world of decentralized stablecoins with DAI. Unlike USDC or BUSD, DAI is revolutionary. DAI isn't backed by US dollars in a bank. It uses collateralization to maintain its peg. Lock up $150 of Ethereum to borrow $100 of DAI. This keeps DAI stable despite Ethereum's price changes, managed by smart contracts on the Ethereum blockchain. No central authority, just decentralized finance. A breath of fresh air in traditional finance. DAI's decentralized nature offers unique advantages. It's censorship-resistant and accessible globally. No single entity can freeze your funds. Accessible to anyone with an internet connection. Now, you might be thinking, Graham, this all sounds a bit complicated, and you're not wrong. Decentralized finance can be complex, but that's where the real innovation lies. DI represents a fundamental shift in how we think about money and financial systems. It's about creating a more open, transparent, and accessible financial system for everyone. No more relying on banks or governments to manage our money. With DII, you're in control. Plus, because it's built on Ethereum, DII can interact with a whole ecosystem of DeFi applications. You can use it for lending, borrowing, trading, and even earning interest. The possibilities are endless. So if you're looking for a stablecoin that's truly decentralized, transparent, and at the forefront of DeFi innovation, you need to keep an eye on DII. It's a game changer. It might seem complex at first, but trust me, this is the future of finance, and it's exciting. All right, guys, moving on to number 15, we've got Uniswap. Uniswap is huge in the decentralized finance space, DeFi. Unlike centralized exchanges like Coinbase or Binance, Uniswap is decentralized, running on Ethereum. No middleman, no company controlling everything. You connect your wallet, trade directly with users. Uniswap uses an automated market maker model. Instead of an order book, it uses liquidity pools. Provide crypto to pools, earn trading fees. Now, you might be thinking, Graham, this all sounds great, but is it really that liquid? Uniswap is one of the most liquid decentralized exchanges out there. We're talking billions of dollars in volume every single day. By providing liquidity, you're earning fees, and those fees can be pretty attractive. But there are risks like impermanent loss, so do your research. Uniswap is a game changer. It's bringing decentralized finance to the masses. Next up, we have Aave, another big player in the DeFi space. Aave takes the concept of putting your crypto to work to a whole new level. It's a decentralized lending and borrowing platform. Think of it like a bank, but everything happens on the blockchain, peer-to-peer. You can use your crypto as collateral to borrow other assets, deposit Ethereum as collateral and borrow stablecoins. Leverage your crypto, access liquidity, and earn interest. With great power comes great responsibility, or in this case, some risks to be aware of. One of the biggest risks with Aave is smart contract risk. If there's a bug, you could lose your money. Use reputable platforms like Aave. Another risk is liquidation risk. Ensure enough collateral to cushion price swings. Despite risks, Aave is revolutionary. It's making finance more open and accessible. All right, moving right along to number 17, we've got Compound. Compound is a lending and borrowing platform similar to Aave. Earn interest on your crypto deposits with Compound. It maximizes your returns. Interest rates are based on supply and demand. Rates update in real time. Watch your money grow. But wait, there's more. Compound also has its own governance token called Comp. Now this is where things get really interesting. By holding Comp, you have a say in the future of the protocol. You can vote on proposals, participate in governance decisions, and really be a part of the Compound community. And here's the thing, just by using the Compound platform, you can earn Comp tokens as a reward. It's like getting paid extra just for using the service. Talk about a win-win. Of course, just like with any DeFi platform, there are risks involved. Smart contract risk, liquidation risk, you've got to be aware of those. But Compound is another great example of how DeFi is disrupting traditional finance and giving you more control over your money. All right, let's talk about synthetics. It's all about creating synthetic assets. Imagine investing in gold or Tesla stock, but owning a token that tracks their value. Synthetics allows this in a decentralized way. It uses synths, tokens pegged to real-world assets. These are backed by the Synthetics Network token, or SNX. It's a wild concept offering exposure to various assets without traditional financial institutions and no need to trust middlemen. Now, the potential here is huge. Imagine investing in anything from stocks and commodities to real estate and even the weather, all on a decentralized platform. Synthetics aims for this exciting future, but there are risks, especially with SNX token volatility. A sharp drop in SNX price could impact system stability. Synthetics is complex and not user-friendly. Do your research and understand the risks. Synthetics is pushing the boundaries of decentralized finance. Remember, never invest more than you can afford to lose. All right, let's dive into Maker, a true DeFi heavyweight. MakerDAO is like a decentralized central bank managing the stablecoin DAI. It uses smart contracts for over-collateralized loans, lock up crypto assets like Ethereum and borrow DAI. Use DAI to earn interest or invest in other crypto assets, but remember it comes with risks. Now let's talk about DAI, MakerDAO's claim to fame. DAI is a decentralized collateral-backed stablecoin pegged to the US dollar. Its value aims to remain stable at around $1. This stability makes DAI incredibly useful for various purposes. You can use it for everyday transactions. It's also great for sending money across borders. The real magic of DAI lies in its decentralized nature. Unlike traditional stablecoins, DAI is governed by the MakerDAO community. No single entity controls it, making it more resistant to censorship. So if you're looking for a stablecoin with real-world utility, DAI is worth checking out. Next up, we have Yearn.finance, a platform that's all about maximizing your returns in the DeFi space. It's like having a financial advisor for your crypto, constantly searching for the best opportunities to grow your assets. Yearn.finance leverages yield farming, lending your crypto assets to earn interest and rewards. Navigating DeFi and finding profitable strategies can be complex and time-consuming. Yearn.finance simplifies this by automatically moving your funds between different lending protocols. Think of it as a robo-advisor for your DeFi investments. While it can amplify returns, remember, DeFi is still evolving with inherent risks. Let's talk about YFI, the native governance token of Yearn.finance. YFI has a limited supply of 36,666 tokens, making it scarce and valuable. Holding YFI grants voting rights in Yearn.finance, influencing key decisions. This community involvement is what makes DeFi exciting. Decentralization gives power back to the users. So there you have it, the top 20 coins and tokens that are shaping the future of finance. From Bitcoin's pioneering spirit to Ethereum's smart contracts and the exciting world of DeFi, the crypto space is brimming with innovation and opportunity. But remember, investing in cryptocurrencies comes with risks. These are volatile assets and their prices can fluctuate wildly. It's crucial to do your own research, understand the technology behind each project, and only invest what you can afford to lose. If you found this video helpful, don't forget to smash that like button, subscribe to the channel for more insightful content, and hit the notification bell so you never miss an upload. Thanks for watching, and remember, the future of finance is in your hands.